right. Good evening, traders. Once more. Today, Thursday, the 17th of September 2020. We're going to talk about something that has most certainly happened to most of us since we started this challenge of doubling our capital. And, sometimes you have done your market analysis, you have seen that the market is going in this particular direction, you have placed your trades, but then suddenly the market turns. Then the question is, how do you bounce back? Because it's not the number of times that you're going to fall, but the more important thing is to come back every time you fall so that you recover from your losses. So we're going to share our experiences, and later we'll open it up to people to give us what they've had as a part of the experience, because losing is part of this forex trading. So it does not really matter what technique or what style you're using. At some point you will lose, but the most important thing is you need to now start mastering ways in which you need to protect your capital once you realize that you're losing. Once you realize that you're losing, then it is very important that you switch gears to make sure that you protect your capital and you do not blow your account, because you can easily blow your account, especially when you start making decisions driven by your emotion. Like you want to revenge a trade, you want to still keep going. Different people have come up with different ways of dealing with losses. Like you've always heard from Coach that is even set up in his system that as soon as it gets to 5% loss, then the system automatically locks him. So he cannot continue trading. So those are some of the things that you can put in your trading plan. But more importantly, I just want to share with you some things I learned yesterday, personally from my own experience. When I was trading so well, I had reached my target, but then I decided to just put
Amefika mayai ngapi? Akaniambia amefika mayai mbili.
a few more trades, and that
Siku yako moja kwa
was the
nini?
beginning of my downfall.
Nilisema anipigie mayai mbili na nimemuuliza mara kadhaa kama hii mayai mbili,
So,
ananiambia ndio ni mayai mbili, mayai mbili. Jackson,
so I'm going to share with you some of the tips that you can deploy when you're dealing with your losses. So first thing that you should do is you should remember never to panic. Yesterday, after I had placed my trades, unfortunately, I had to get away from my computer because I was handling some things. In my analysis, the market was going up. So just at about 4:30, just before the New York market opens, I placed a few, like 30 trades for buys. I knew it would just be a matter of minutes before they took profit. I closed for the day, then I go home. Then I got distracted to a meeting. When I came back, the market had turned. So the first thing that I did is I remembered what Vincent usually does. Is I quickly pulled my stop loss. I think I like the phrase that Vincent usually says. He pulled them to Mombasa. So I pulled them to Mombasa so that it could give me some ample time, or I pulled them far away to the last low that happened, I think, last week when most people complained that the market turned against them. So I took them to that last low so that it could give me time to recover, so that I tried to recover every time the market goes back up. So the first mistake I realized I did, that is bullet number 2, I was still buying when the market had reached, although the trend was showing up, but I was still buying when the market had reached the last high in the price cycle for yesterday. So instead of placing sales, I placed buys. But because I was distracted and I was not paying attention, I did not realize that I was doing buys at the top of the price cycle. So that is one mistake that I noted. We keep talking about this, but from time to time, because you're not paying attention or because you're distracted, you might find yourself in this situation. And it happens so fast. You just click very fast, and before you know it, you have 30 trades that you have taken in the wrong direction. Then, when I came back after my meeting, I realized that I was in losses. Actually, I was almost hitting my stop loss. And my idea normally is not always to hit the stop loss. So that's why I had to pull them down. And then I had to now come up with a strategy to try and recover. So I left the office, I came home. Unfortunately, by the time I was getting home, the market had not decided to go back up. It was still going down. Now I was into negative 100 pips. Now imagine negative 100 times 30 trades. That is almost negative 3,000 pips. Now I had to craft a way of getting back to profitability. So what did I do? I went back to the basics. And what is the basics? Look at the market structure again. Look at what it's trying to do, and don't force it. So you see, initially I'd placed buys, but the market had clearly changed. Now the market was favoring sales. Unfortunately for me, by the time I was realizing this and doing the analysis, my margin was now close to zero. So I could not take any buys or sales. No. Now this particular one was supposed to be sales. I could not take any sales. I could not take any more sales. So then what I decided to do is push the stop loss even further to give me time such that every time the market retraces back, I killed some trades and then I replaced them with the ones that take profit. So I'm going to show you actually on the chart exactly what happened, and then I'm going to invite one person to give us his own strategy, how he has been dealing with the losses, and then I'm going to open it up for discussion. So let me just share my chart. I hope you can see my chart. So this is what happened. Yesterday, the market was on an uptrend. As you can see, I marked yesterday. From early morning, it was almost on an uptrend. So normally what I do, I look at the market structure. As you can see, this was the low, and the market was trying to go back to this high that you see here. So it was coming from here. It was trying to go back here. So after I had analyzed the market structure from a higher time frame, I knew that mostly I was going to do buys. So I waited a little for the market to confirm after the London breakout, and then I started doing my buys. So yeah, so let me show you. Let me just advance. So you can't see what happened after this, but I'm going to show you. So I just kept doing buys, and I'd already by around 4 or by early afternoon, I'd already reached my target of 1%. But then just around 4, because the market showed that it was still going up around here, I decided to place a few more buys. Right now, by this time, it was not this red candle that you're seeing. It was still showing the signs of going up. So I'd placed some more buys, hoping that it will take profit because it had already passed the last resistance point. What I did not know that this was the last high of this price cycle, and anything could happen after this. And I did not take care to look at the telltale signs that the market was turning. So over here, it danced a little. It danced a little. It danced a little. It was not clearly indicating whether it's going up or down. And then now it started going down. You see, this is the telltale sign. So here, notice the candles are getting smaller. The green candles are getting smaller, but the orange candles are getting bigger, meaning these ones are losing momentum and these ones are gaining momentum. If you look at what coach has been telling us, the 3-bar reversal, then clearly this orange should have been my indicator that the market had turned. Unfortunately, by this time, I was not anywhere close to my computer. I just rushed to a meeting. So I was not available to take immediate action and kill those trades. So here is what happened. By the time I was getting back, that was just some minutes to 5 around here, the market had significantly gone down. You see, by this time, it was now almost close to 66 pips in the red. So then I hope that it will go back a little so that I could survive. So it showed signs that it was coming up, but that was not to be. So it just kept going down, 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 down. Actually, by the time I was waking up in the morning at around 6, I thought I was going to get the dreaded margin call and my account will be blown. You can see how far it went at 6 o'clock in the morning. You can see how far it went at 6 o'clock in the morning. So basically, I took my trades here, and by around 6 o'clock, which is here, I was at negative 134 pips. Times 30 trades, that is more than close to 4,000 pips in the red. So then I decided that I was going to recover during the day, just when London breaks. And luckily for me, it started showing signs that it was going up. And as you can see on this deal map, I waited for it to go up enough to take a few trades so that I could recover. And as I was taking trades, I was also killing the ones that were in the negative. At this time, at least I'd recovered enough, from negative 134 to about negative 70 pips. So the strategy here is I was taking more buy trades as I kill a few negative trades so that I compensate. So every time I kill like one trade that is in serious losses, I place several buys to compensate for it. That way, by the time I was closing my trades, I was not so much in the negative. Like my account did not look so bad. Otherwise, if I just decided to kill my trades down here, over here when at 6 a.m., then chances are I would have been, talking about negative 50% loss, on my account. But to minimize that damage, then I had to do it strategically that as I kill some, I also take some to compensate the ones that I'm killing. So the strategy that I was using here is I wait for the market to retrace a little, I kill some trades, and then I take some. At this moment, I did not know that. I did not want to wait that the market will go all the way back up here, which is about 62 pips. So because I did not know, I did not want to take chances. So I kept killing the trades as I take new ones. And as you can guess, even as at the close of day today, the market really has not gone back to where it was yesterday by the time I was starting to make losses. So you see, I do not want to wait. This is the current price right now. I do not want to wait from the time I was killing them here to here, which is just 23 pips. I do not want to wait the whole day to gain just an extra 23 pips, and yet I do not have time to sit in front of my computer all that time. So I took advantage during the volatility of the London breakout and killed most of my trades, but at the same time compensated by taking buys to compensate for the loss that I was getting. So, fellow traders, that is how I try to manage the heavy losses that I would have experienced by today 6 a.m. so that it now becomes manageable. Then in terms of recovery, it takes me a shorter time to recover, maybe 1 or 2 days, then I'm back to normal. So that's, market will always turn against your trade sometimes. So you need to develop your own strategy on dealing with the losses. You know, at this moment at 6 a.m., I would have been maybe driven by emotion and decided that I was going to kill all the trades. You know, at this moment, that would have been negative, almost negative 3,900 pips. That is huge. That is a very big loss. But because I was patient enough to wait for it to retrace, every time it retraced long enough, I killed some and then I took some to recover the profits. So that has been my story for today. I am going to stop there, and I am going to invite Jackson to tell us how he has been dealing with his recovery, because I think he showed some tremendous recovery a few days ago. Thank you very much. Welcome, Jackson.
Thank you, Ken. Thank you so much. And I want to congratulate you actually for such a comeback. It is not easy. Another person would have easily given up and actually decided, I'm blowing this account, let it be. Yeah, that is now that kind of resilience, I think, is really what we need to adapt, such that you don't give in, you don't give up, you just fight back your way out. And it is doable. It is doable. Ken, thank you so much. You have shown us that it can be done. Now, on my part, of course, these challenges are, we all face these challenges one time or the other. I remember the coach even the other day also actually owning up that also it was not a good day. I think it was on a Friday last week. So, you know, these are things, these are the realities of trading, and it is good that they are happening so that we can be prepared, mentally prepared to deal with them as they emerge. Because for sure, you will never be too careful. You can never be so, you know, so exact that always you will get it right. Sometimes you will miss a step, but now the question is, when you realize actually you do not get it right, what do you do? Yeah, that is the thing that we need, all of us, everybody, to develop a strategy that will help you. It is like the parachute that will save you, you know, when the plane comes down crumbling. What parachute will you use? So, Ken, we have seen what is that's one of the strategies also I've been trying to use, so that when I have you know, outliers, there are those, when the market moves the opposite direction, there are outliers, the entries that you had posted right at the turn of the market, you know, erroneously you did so. But by the time that you realize it may be too late, so they become outliers. Now it's a question of trying to see how you can minimize the loss, because the loss, for sure, you'll have to pocket the loss, but how you minimize it, how you handle it, is what will make the difference, because you might just end up throwing everything away, but still with some patience you can be able, because the market retraces, as you have seen the Ken's case. The market always retraces at some point. Wait until you can see that it is moving back towards you. Don't wait to clear it, yeah, the loss, but let it just, if it comes halfway, then you have saved a half of the losses that you would have incurred. And that is a strategy, I think, traders, it will go a long way in helping us. Now, maybe on my part, I might want to say that every day has been a learning experience. And indeed, I hope this is the same experience traders we're going through, because every day, other than the pips you are going to pocket, I think you must ask yourself, what have you learned? Have you reinforced something that you had learned to have seen it actually it applies? Or have you learned something new that now tells you, now this is what I've been doing wrong because repeatedly I've seen this thing making this decision and it ends up this way. So I think that is something that we must be noting down. And I hope we trade with a notebook, such that you can be able to note down, take notes of what the things that are working out. You keep on working on them. You keep on trying them. I know it is not easy. It can be easily said than done, because some of the mistakes I identify, the following day I end up finding myself also making the same. Yeah, all this has to do with the psychology of trading, and it will take time as we continue, molding ourselves to that, to be in that position whereby you can be able to make the right decision. We are not yet there. We are still toddlers. We are learning, and I'm glad we are seeing positive results from majority of us. We are on the right track. Let us keep learning every day. Ask yourself, what have I learned today? So that tomorrow you reinforce that. And this is how we'll turn ourselves into professional traders, by reinforcing the positives and finding ways of dealing with the negative. Because as we trade, they will always emerge, depending on the strategies we use or the entries that we make. So something else that I've noticed that has been causing losses to me in particular. I don't know about the other guys, whether it is a problem for you, but the time of entry has been one of the problems. Like today, it almost put me in problems, because I think I entered a little bit early, and I started misbehaving there and taking a few trends here and there, testing the market, and those ones actually they ended up being losses, all of them. I think I only made about 5 pips positive at that time that I was trying to to play around. So these are games that I think they're too costly, and for me, from my experience, what I've seen from 10:30, actually from 10:30 should be the time that we purpose to enter the market, because at that time now the market has seriously started moving, and if you're going to take a position, if it's going up, that will be a sustained movement for some time, and therefore there you can be able to take trades accordingly and deal, of course, as you monitor the highest point that it is likely to reach. And of course the timing of the turning, that actually we must master that. We must master that, because as Ken clearly put it, if you are keen enough to watch the trend upwards or downwards, by the time it does not just turn around, by the way, immediately. No, from my experience and from what I've been seeing, if you're keen enough, you'll see it slowing down. You'll see it, the candle starting to shorten, and even the curve down there, it starts like becoming like a little bit wide, not straight. Yeah. So those are telltale signs that actually we should be keeping an eye on. Yeah, we must keep an eye on that, so that you don't enter trades while the market has reached its peak. It is now going to retrace. Yeah, that would be it would resort to this we so calling outliers, which actually they end up actually putting us in a lot of trouble, because as I was saying again, you enter the market early, you are going to make entries which you will want to you'll make them early, the market moves away, those actually entries, they become outliers, and therefore to get to come and actually redeem them, you will be forced even to stay in the market even much longer, praying that it will come down to where actually those trades are. So to play safe, it will be more productive. We are going to get more pips if we can be a little bit patient at the point of entry, because once you enter the market, when it's moving, there you can be able to continuously trade until actually there is a turn. And even exiting, even if it turns and comes down, again, even you'll continue trading to a point whereby now by the time you reach the next turn, actually you are ready to exit the market without being tied down. Yeah. So today I had those outliers which I ended early, and they tied me down a little bit in the market. And in the process of trying to reach them, the market again went up. Then there I found myself in some trouble. I had to kill almost, I think, over 40 trades which I had taken, so that I may reach the bottom. So anyway, what I'm saying is that one of the ways we'll minimize these losses is to plan such that we don't make entries at the fast, at the far flung ends of the price cycle. Those are very dangerous areas, because once the market moves, those entries, they start accumulating losses as it moves along, and to recover them then now will require another strategy altogether, or else it will end up tying you there. You end up even losing good pips that you had actually accumulated over the time, and then it ends up being actually a bad day in the market. So traders, that is from my experience. If we can manage our entry point, I think we will see a big difference in our trading. Now, something else that I may want to mention about Fridays. Fridays, I'm sure we all know that Fridays have been a little bit tricky. I don't know whether it is only me, but all the Fridays behind us have always challenged me. I don't know why. Tomorrow, I think I will be a little bit careful, and I would urge everybody that we be careful. Let us watch the market keenly. Let us take calculated moves. We would rather make few of them, which will materialize, and going full blast, and actually we find ourselves again moving towards losing our capital. So, ladies and gentlemen, I will urge tomorrow, let's challenge ourselves that we will want to see what is it, whichever the market, whether trading, ranging, or whatever. Let us actually be a little bit careful, so that at least by the end of the day we can have some positive results to share. Otherwise, thank you so much, Ken. I don't want to, I'm sure the time is moving. I would like to give a chance also to the other guys to say something about the experiences.
All right. Thank you so much, Jackson. I think my key takeaway from what Jackson has said, and that's why Coach has been saying, let's stick to one currency. With time, you begin to learn its behavior. Like what Jackson is saying, I think Jackson mostly trades the GBP USD. You'll notice that Fridays, there's a way it behaves. So with time, and that's the practice, you'll almost know, even without doing a lot of waiting for a lot of analysis from news and everything, you'll almost know the behavior of your currency if you trade it long enough. And that's why it's important that you develop your trading and discipline around one. For me, I like the Euro USD, so I'm really learning on the Euro USD and its behavior. I know the bad days, like if there's going to be news from the US, I stop my trading by 2 p.m. because most of the news from the US come from 3 o'clock. So I do not want to be in the market by 3 o'clock on Fridays. And that is because I am specializing on one currency. So that's why I usually try as much as possible to end my trades before 2. But is it practical? No. Because like Jackson says, there are those a few trades that you just clicked and they make you to hang in the market a little longer. And most of the time, you end up in trouble. I would like to welcome Vincent as well. I think he's been managing long-term strategies and long-term trades. Maybe share with us. Yesterday, actually, his strategy really helped me. Pushing my stop losses to Mombasa. At least it helped me to wait until today morning to deal with my losses. So Vincent.
Hello team, can you hear me?
Yes, Vincent, please go ahead.
Okay. Thanks. Good evening, everyone. Last week was a tough week for me. This thing of trying to multitask. I was working on a bid proposal and I'm trying to trade at the same time. Then I put in some trades. Euro GBP. But in hindsight, when I looked at it, the market was actually going up, and I don't know what I was looking at. I took a sell, and the market left me hanging. So the reason why I initially sent the stop loss very far I tried to do that, first of all, looking at the higher time frame and just looking at where the market is, where the last high was, where the last low was. And I could see that over time, the market is going to retrace, but it will take time. But then I ended up in a situation whereby I think the market was moving rapidly away from where I'd taken the trades, and the equity was dropping. Then I realized I was going very fast to the stop out margin. I think it's 30%, and that would blow my account. So I decided to do exactly what Ken has just described. I looked at some of the trades that had been hanging for a long time, but then I realized if I just kill all of them, I'm going to take a big loss. So I tried to mitigate the risk. So what I did on my part, and probably for learning is probably not. It's a little bit against the rules. I took each one of those trades. I think there were about 25 of them. I reversed the direction of the trade. That means you take the loss. But then I could see where the market was. And then, so the take profit would be very close to the market. But then I waited also where I could see a clear trend of where the market was moving. So I reversed it. I reversed the position. I took the loss. And then the new take profit, I adjusted it to, because initially it was 5 pips. So I adjusted it to 10 pips, and I could see the market was going in that direction. And then I doubled the take profit. So I adjusted to 10 pips, I doubled the take profit to 20. There are some I quadrupled to 40. So for every trade that I lost maybe 60 pips, I was able to recover 50 pips, if I may use that example. So that, in a sense, helped me to minimize the losses and sort of raise the equity level. So that's one way in which I've tried to manage the risk. The thing that I'm still not quite sure about is what is the guideline on the stop loss level that one needs to put. I know we started with 2 pips, 5 pips take profit, then you put a stop loss of 35. How do you determine whether you should use 50 pips as a stop loss, or should you put it at 100 or 200 pips as a stop loss, so to say? But again, after doing analysis of the market structure. So that's something that I'm still battling with in terms of how do I actually choose my stop loss. Yesterday, I set up a trade for the 4-hour trade. I went and looked at the market structure. I went to the weekly, went to the daily. I set up the 4-hour trade. And just in fact, as Coach was saying, the longer time frames, there's less noise. And I think if you set it up properly, I think the higher chances of taking profit. And within 2 hours, it actually took profit, because I'd set up a take profit of 25 pips, and I hammered 5 of them, and it took profit on all of them within 2 hours. So the other thing I'm trying to figure out is the balance between scalping, smaller take profits, and the long-term trades, the 2 hour, the 2 hour or the 4 hour. I mean, as part of a trading plan, should I say 50% 4 hour, and then the rest I do scalping, or something like that? Maybe if somebody has some guidance, I think it would be useful. And then lastly, the other thing that I've also been doing is, after I've marked out my trend bands, whether it's up or down, before I take the trade, I measure the height of the band. So I say, okay, the market is going up. when it's been ranging, maybe it's 25 pips or it's maybe 20 pips at the top of a price circle and at the bottom of the price circle. So, and then I make sure I enter, because my scalping, I use 5 pips. I enter just if it's going up, and I'm sure it's going up, I enter after it has started going up, maybe about 25th percentile height of that band. And every time I've done that, and again I do them rapidly. I take like 20 trades in that setup, and within a few minutes, I see it takes profit. Then I wait again. I see it take profit. So the measurement, I think, has been helping me quite a bit, just to be sure that I would be able to take the profits. Yeah, I think that's really what I can share for now.
Thank you, Vincent. Actually, it's very important that you measure. Once you mark your trading zones, it's very important that you measure the number of pips. So, like in my case, my take profit is usually 2 pips. So I usually know. I adjust my chart. There's a way you can adjust your chart such that one box represents 2 pips. So normally I adjust. So as the candle moves lower, now that I can eyeball it and say it's 2 pips lower than the top of the price cycle, I start taking my trade. So I take a few, like a third of my trades around that time. I wait for it to retrace again. I take another third, and then the last bit, in the last bottom part, so that when it goes back up, then it progressively takes profit. But more importantly, I think you've asked a very important question, like how do you balance your risk? How do you know that I should take my stop loss to this? I think that's something that for now coach has left open, because first it depends with your personality, but more importantly, what we try to do, the trading we do in scalping, first of all, is defying all logic, is defying everything that is written in the book. But the reason why we put it at 35 pips or 50 pips is because in the lower time frames. Okay, I've just been reminded that we only have 5 minutes. In the lower time frames, sometimes the market, is too volatile, and if you follow the book, so the rule of the book, like if my take profit is 5 pips, then my stop loss is 5 pips, then most of the time then you're going to lose, because sometimes the volatility is too much. So you try to put it as far back as possible, so that when it's that volatile, by the time it decides to change its mind, you will have taken your 2 pips or 5 pips take profit. I think that's why for now we are putting at 35 pips or even 50 pips. Then I think for the question you asked about balancing between scalping and long-term trades, again, I think it's more will be driven by your personality. If you do not mind to wait 2-3 hours or even a day or even 2 days to take profit, then long-term trade is for you. There are some people who know that in scalping I can go for a few hours and make 200 pips or even 300 pips, so they don't want to wait. But there's some level of risk also that is involved, especially when the market is too volatile. So the longer time frames, a lot more accurate, but sometimes you might wait longer before you even realize profit for your trade. So I'm going to allow the last 2 minutes for any question or comment from anyone. We have about 2 minutes before the session ends. Anyone? All right. If there's no question or comment, I think we can continue on the WhatsApp chat. We can continue sharing. But I believe we are learning and we are getting better every day. The essence of sharing or even attending these evening classes is so that we share our experiences and we get to empower each other, so that we become better than what we were last week, last month, yesterday, so that tomorrow when we wake up, we are better traders. So thank you very much for attending. Tomorrow is Friday, like Jackson said, trade with caution. But more importantly, check, I think there's something called Forex Factory News. Check whether there's going to be any news. That will always guide you on the time you should be stopping your trade depending on the currency you're trading on. So thank you very much. Happy peeping for tomorrow. All right. I think our class is ended. You can